Binance has just bought hundreds of millions of dollars worth of BTC. I'll tell you about it right now. We're also going to talk about Bitcoin's mining difficulty, which has dropped sharply. We'll talk about a new crypto exchange valued at more than $1 billion. We'll talk about security risks on blockchain and a bunch of other topics. Hi, everyone, and welcome to Crypto Red, the crypto news channel. Let's start with Bitcoin mining difficulty. Look at this. It just dropped hard. I'll show you the chart real quick. Here we are on the 3-year mining difficulty chart. If we zoom out and take a broader view over a long period, you can clearly see it climbed a lot over the last few years, with Bitcoin's price also rising a lot. And now with the latest correction, difficulty has gone down. Just to recap, mining difficulty is an automatic mechanism that adjusts roughly every 2 weeks to make sure we keep getting about 1 Bitcoin block every 10 minutes. If blocks are coming too fast, for example, if we average 1 block every 8 minutes for 2 weeks, then the difficulty increases, so we get back to targeting 1 block every 10 minutes. So what does this drop tell us? It basically shows that for a number of miners, it's no longer profitable to mine at current prices. So they've either left the network or simply shut down their mining farms temporarily. With electricity cost and everything else, it's just not worth it for them. And what you really need to note is we haven't seen a drop this big since 2021, since the China ban. That doesn't mean we're back to the 2021 levels, not at all. We're still very far from it. Look at the mining difficulty in 2021. We were roughly at least 5 times lower than where we are today. So yes, we're still much higher now. The point is simply that we haven't had such a brutal drop in a long time. And that drop is also linked to the fact that mining has effectively become almost twice as expensive for miner because they're earning less. And just to be clear, Ethereum doesn't have this exact problem anymore because they moved to proof of stake. Proof of stake has its own issues, of course, but it's a different set of problems. And right now, there are very few cryptocurrencies left in proof of work, fewer and fewer over time. We've seen some big proof of work projects running into issues recently. Thinking of Monero, for example. With the mining issue with Cubic. So yeah, there are some issues with proof of work. Proof of stake, as I said, also has this problem too. And there's absolutely no reason for Bitcoin to switch over to proof of stake. That's not the topic. But smaller proof of work coins have serious problems. Like I said, they're more easily targeted by 51% attacks and other issues like this, because it's possible to rent hash power, which obviously not the case for Bitcoin. To do that on Bitcoin, you'd have to rent, I don't know, billions and billions of dollars worth of equipment. So yeah. All right, let's stay on Bitcoin and move on to Michael Saylor and his company strategy, which keeps buying, just less than before. Michael Saylor just announced a purchase of $90 million, more than 1,000 BTC at around $78,000 per coin. That feels a bit expensive to me. I don't know exactly when the purchase was made, but people criticize him for the way he buys BTC. Maybe he's buying a bit too high. Anyway, $90 million is still huge. The confidence in BTC is still there, and they keep accumulating. And he's not the only one. Look at BitMine also. They bought the same amount, around $80 million worth of Ether, of ETH, $40,000 of ETH, and look how regularly BitMine is buying ETH. I'm on this side, at least different treasury companies buying ETH, and it's basically a weekly rhythm. Around 40,000, 30,000, 20,000, 35,000, 40,000, 41,000. It's really consistent. They're still buying ETH really aggressively. Even though they're down right now, BitMine is sitting on several billions of dollars in losses. It's unrealized losses. They haven't sold, but still, they hold around $10 billion worth of ETH, and they spend a lot more than that to accumulate it. They're now above 3.5% of the total supply, which is honestly massive. They still have cash left, so they can probably keep doing this for a few more weeks. After that, we'll see if they need to raise money. And yeah, I think it could be tough to raise money after such bad performance of the initial investment, but you never know. Tom Lee is extremely persuasive, so I wouldn't be shocked if he still managed to raise even in those conditions. All right, next, let's talk about Binance. Binance just announced a $300 million Bitcoin worth of Bitcoin for the SAFU fund, their security fund. Basically, if Binance ever get hacked or has a major security incident, this fund, which they want to bring to around $1 billion, is there to protect users. Originally, the fund was held in stablecoins. A few weeks ago, they decided to shift into Bitcoin because they believe in BTC long term. And yeah, it makes sense to keep it in BTC because most of the assets on Binance are crypto. So if crypto market goes up, you also want the protection fund to appreciate too. That feels coherent. Yeah. They also said to reassure people, don't worry if the fund drop below 800 million, we'll top it back up. So if Bitcoin dumps hard, they'll add more. And they moved fast. They just bought 4,000 BTC. They're going to keep buying because right now they're about 700 million. There are about $700 million in the fund, and they'll add more and get close to the $1 billion in BTC. So yeah, that's a very good thing for users on Binance. That's a very good thing for BTC users also because it shows that Binance really trusts BTC. Now, realistically, there is probably a low chance of Binance getting hacked. But we've seen crazier things. Look at Bybit. They had a hack for more than $1 billion and they covered it with their own fund. If something like that happened to Binance, they'd use the SAFU fund to reimburse users. The real nightmare scenario is everything gets hacked on Binance, and I don't really believe that because it's really improbable. That said, it doesn't mean I store my funds as cold storage for years on Binance, but overall, it's still a fairly safe platform, whatever people say. Now, let's talk about another exchange, one founded by a former FTX guy. I know that doesn't exactly inspire confidence. It's Backpack. Backpack has been around for a while, and now they're basically preparing a fundraising. They've already raised, in fact, at $1 billion valuation, which makes them a unicorn, a new crypto exchange worth more than $1 billion. They also announced they're going to launch a token. And what's really interesting in this new kind of tokenomics is they're doing something a bit like Mega ETH, where a big portion of the tokens, roughly 1/3, won't be unlocked right away. These are the tokens tied to the founder, to the team, and they only unlock if they hit specific KPIs. For example, if they manage to launch Backpack in a certain number of countries, or if they reach certain revenue levels, the idea is insider can't just unlock everything and dump on the community. They only get access to this token if they actually succeed and grow Backpack and grow the value of the exchange and the token. And that's genuinely interesting. Mega went further and basically said we will not even launch a token if we don't hit certain KPIs. But honestly, what Backpack is doing is already pretty good. And I think we're going to see more and more of this narrative. Either we don't launch a token or teams don't get paid until the project is actually a success. It's really interesting, and I think it aligns the incentives much better between users, in fact, token holders and the team behind the projects. So that's a good thing, yeah. And there's still around basically 37% of the token that won't be unlocked until 1 year after Backpack IPO. So that's not something that's coming immediately. It's for later, I don't know, in 5 years or more. And honestly, I like that approach because I genuinely like innovation in tokenomics. It's an area that's evolving really fast. At the very beginning, if you remember, when crypto projects first started a long time ago, none of this existed. There wasn't all this vesting and stuff like that. That came later, basically as a response to the market, and that's exactly what we're seeing now. People got tired of team constantly selling on users, on holders, on retail, and they try to change that. So yeah, that's a good thing, and we'll see when the Backpack token launches. So yeah, let's talk next about address poisoning. I've mentioned this type of security issue before quite a few times as well, and we're seeing more and more of it. And here in this article, you can see that 2 people lost over $62 million because of address poisoning attacks. So address poisoning is when you send a transaction on the blockchain, and sometimes just a few seconds later, you receive another transaction in your wallet with an address that looks very similar to the address you interacted with. But it's not your address. It's not the real address you send money to. It's a fake one. The first characters and the last characters look the same, but in the middle it's different. And if later you send funds again to the fake address, you lose your money. And people have lost huge amounts of money in these scams. One person lost $12 million in January. Another person lost $50 million in December. So we're seeing more and more fraud like this. It's increased recently on the Ethereum network with transactions fees going down. These attacks have become even more profitable because it's basically a volume game. You have to send thousands and thousands of transactions when gas fee are too high, it's not profitable for attackers. And when gas fee are low, it's become profitable for them. And that's what we're seeing right now. So be very careful. The best practice is simple. Never copy an address from your transaction history. When you want to send funds, go check somewhere else. You can find your own address directly in your wallet. And for the addresses you want to send money to, or if someone sent you an address, go back to the original email or the original Telegram message where he sent you this address. So yeah, be very careful. Also, wallets like Rabi have a feature when you can whitelist certain addresses, and that can be an extra layer of protection too. So do that kind of things. Don't hesitate, because it's really, really important. The blockchain doesn't forgive mistakes like this. And I know there are quite a few people who lose money this way. Sometimes some people contact me and ask me, what can we do? Unfortunately, there's very little we can do after the fact. That's what I wanted to tell you today about the different crypto news. I hope you enjoyed the content. If you did, don't hesitate to like, comment, subscribe, and I'll see you tomorrow for another video. Bye-bye.